Hello everyone and welcome to your favorite channel Crypto Hub, where we'll be discussing XRP news today. Elon Musk just said this about the XRP price. We all know that the SEC has erected numerous roadblocks in the way of Ripple and Elon Musk. Both want to build a free monetary system, and Musk has been loud in his opposition to the government. Let me tell you about the SEC's relationship with both of them. The Securities and Exchange Commission (SEC) of the United States is indicating that it intends to regulate the space. Following the 2017 Dow investigation, the SEC issued a warning that many cryptocurrencies, particularly those launched in an initial coin offering, are considered investment instruments. Security trades are heavily regulated, therefore anyone who issues, sells, or simply trades these tokens may be breaking investment rules. While technology and trends in the blockchain space move rapidly, securities rules do not. The SEC's intervention will fundamentally alter the way Bitcoin market operates. Here are the three developments to look out for in the next several years. Although the SEC has focused much of its enforcement actions on ICOs, new types of blockchain tokens have emerged in recent years, ranging from decentralized lending (DeFi) to non-fungible tokens. Many of the new ventures appear to work around existing rules, either by running without a central operator, decentralization, or by representing tokens that are harmless, such as in-game objects or digital artworks. However, securities regulations apply to these tokens to the extent that they are sold as investments. On August 6, 2021, the SEC launched its first enforcement action in the decentralized financial field, charging the platform DeFi Money Market. The project's founders agreed to pay a total of more than $12 million in ill-gotten gains, as well as $125,000 in fines. Securities rules may soon be applied to NFTs by regulators. Hester Pierce, one of the SEC's more crypto-friendly commissioners, has warned that some NFTs might land investors in legal trouble, particularly if they start trading fractionalized shares of a coin. While the SEC has yet to announce any enforcement actions, investors who believe they were offered unregistered securities are suing at least one NFT operator. Gary Gensler, chairman of the Securities and Exchange Commission, argued that crypto exchanges should be required to register as securities markets during a hearing before the Senate Banking Committee in September 2021. He warned the committee, "Make no mistake, if there are securities on these trading platforms, they must register with the commission under our regulations unless they qualify for an exemption." Historically, cryptocurrency exchanges have been opaque, allowing their owners to make money without having to answer to governments or their clients. Wash trading, front-running, and freezing customer balances have all been accused of by many exchanges. Crypto exchanges would be required to record their trades and implement technology systems to make their order books audit compliant if they registered with the SEC. They would also be subject to tight order execution procedures in order to avoid market manipulation. Many exchanges have already chosen to relocate outside of the United States and restrict access to American consumers in order to dodge US restrictions. Many exchanges, on the other hand, consider compliance as a price to pay for access to the lucrative US market. Coinbase, North America's largest cryptocurrency exchange, was the first major trading venue to register as a broker-dealer after being accused of insider trading. Stablecoins, blockchain tokens whose values are tethered to the dollar or another fiat currency, are another possible target for regulators. Most stablecoins hold huge stockpiles of cash, treasuries, or other low-risk assets to back up their peg. Some stablecoin issuers, on the other hand, have been accused of manipulating the market by buying cryptocurrency to drive up prices. The Commodity Futures Trading Commission penalized Tether, the largest stablecoin, $41 million in October 2021 for misrepresenting the nature of its reserves. Those reserves included unsecured debt, third-party bank accounts, and other cryptocurrencies, despite the fact that it was normally backed by cash. The settlement came after the New York Attorney General's office filed a similar lawsuit. The SEC may be interested in stablecoins as well. The majority of stablecoin trades are also securities transactions, since the Commission views crypto exchanges to be de facto securities brokers. The SEC has signaled that it may be examining the largest stablecoin, despite the fact that it has not yet filed a lawsuit. According to the Wall Street Journal, which cited sources familiar with the situation, the Securities and Exchange Commission is examining whether recent stock sales by Tesla CEO Elon Musk and his brother Kimball Musk, who sits on Tesla's board of directors, violated insider trading rules. Tesla's stock sank briefly in response to the announcement, but quickly recovered and was up more than 4% in afternoon trading. According to reports, the SEC investigation began last year and is focused on stock sales by Kimball Musk that occurred one day before Elon Musk urged his tens of millions of Twitter followers to vote in an informal poll, telling them that their vote will determine the destiny of his Tesla holdings. The Securities and Exchange Commission (SEC) has declined to comment on the report. An attempt for a response from Musk went unanswered. Musk did, however, suggest a future piece concerning Tesla and the SEC that the journal was reportedly working on In an email conversation with CNBC on Tuesday, the SEC disclosed sensitive material to the WSJ, willfully breaching federal law, Musk wrote in response to a question from CNBC regarding his lawyer charging the SEC of leaking information. "We got out about it because the Wall Street Journal, in their desire to get a scoop, jumped the gun and asked Tesla about it before rather than after the SEC publication." The SEC and the Wall Street Journal were contacted by CNBC for comment on Elon Musk's alleged leak. The Securities and Exchange Commission did not respond. The journal declined to comment on the story's sources. Musk also spoke to CNBC about his strained relationship with President Joe Biden and expressed support for the Justice Department's short seller investigation. "Much has been made recently about unrealized gains being a form of tax avoidance, so I propose selling 10% of my Tesla stock," Musk said to his 62.5 million Twitter followers on November 6, 2021. Do you agree with this? According to the total provided on Twitter, 3,519,252 people responded, with 57.9% of them voting yes. According to financial papers, Kimball Musk sold about $109 million worth of shares the day before his CEO brother's Twitter poll. Following Elon Musk's Twitter poll a few days prior, shares fell on Monday. They had been rising since late October 2021, following a solid third quarter in 2021 and Hertz's statement that it was acquiring 100,000 Tesla vehicles for its fleet. After Hertz's statement, Elon Musk delayed a week to clarify that Tesla had not yet signed a contract with the rental vehicle firm. He teased investors who were short Tesla shares on Twitter before the clarification, writing, "Tesla hurts shots." While some fans thought they were advising Musk on stock sales by voting on his Twitter poll, the Tesla CEO announced in September 2021 at the CODA conference that he was expected to sell a significant chunk of his options in the fourth quarter. He also stated that he had to sell a significant percentage of his stock to pay his tax burden. According to public documents, the majority of the Tesla CEO's insider transactions were part of a Rule 10b5-1 trading plan dated September 14, 2021. Insiders can use this type of plan to make transactions in their own company's stock for a specific date in the future. Musk has been embroiled in a legal battle with the SEC on the Securities and Exchange Commission since the SEC accused him of several securities fraud in 2018. In 2019, Tesla, Musk, and the Securities and Exchange Commission reached a new settlement deal to address the accusations. Musk had to step down as chairman of Tesla's board of directors for 3 years as part of the agreement, and the CEO could no longer claim innocence after the settlement, but the agreement was not a finding of guilt. Musk has accused the SEC of harassing him with an unrelenting investigation in retaliation for his vocal criticism of the federal financial authorities. That's it for today, guys. Remember to like and subscribe to my channel, and keep in mind that this video is intended to provide knowledge rather than advice, as cryptocurrencies can be extremely volatile.